Hi, greetings. I'm CA Neeraaj Mittal from G-Inditure Consulting, India. Many banking leaders still confuse ESG with CSR. That's a dangerous mistake. While CSR is about doing good, ESG is about being accountable to regulators, investors, and your own balance sheet. CSR is optional. ESG is audit ready. And investors now use ESG scores to assess not just your ethics, but your financial stability. Banking ESG disclosures are now driven by formal frameworks. For example, CSRD or SEBI in India or ISC in Iraq. Stock exchanges and central banks are legally enforcing ESG. These are enforcements, not aspirations anymore. Most important things, KPIs, like CBI's green finance requirements. These have made it mandatory to look to ESG as a strategic lever for profitability and future growth. It's a compliance requirement now, it's no more discretionary. Many banks still fall into the trap of thinking an ESG paragraph in the annual report or a donation to some green plantation NGO will suffice and be enough for ESG compliance. But ESG reporting requires traceability, measurable data, auditable track records. You have to prove it much better that now it's in your spirit and in your operations. Your ESG performance affects loan pricing, investors' decision, and even your capital allocation. It's no longer just about climate. It's about compliance and your input cost. The cost of capital, the future profitability, everything will get affected by ESG KPIs. KPIs like carbon intensity on your loan books, Scope 3 emission from your financial assets, or ESG adjusted return on equity are what investors and regulators want to see now. So what banks must do now? The very first thing, stop treating ESG as just a formality. It's a profit lever which will define your future. You can adjust and shape your future based on the inputs of the ESG and the KPIs. Align those KPIs to your ground operations. It has to be integrated into your loaning, financing, FTP, profitability. All these things have to be aligned with the ESG KPIs. But the good news is that you have matured systems now available which can track the complete data and give you complete output reports. Systems like SAP, Oracle, and other Salesforce and Microsoft products, especially if I say for SAP, products like SAP PaPM or SAP Sustainability Control Tower, your SAP EHS, that is Environmental Health and Security, SAP Success Factors, so these SAP GRC, so there are so many products now available depending upon the maturity and availability of your data, which can play the role of automating the complete end-to-end process. So that's how. Stop treating it as a formality, not take it as a profit lever. So are you ready to now move and take ESG beyond just a tick in the box and actual compliance as a future profit lever? If you're tired of ESG guessworks or last minute reporting chaos, let's talk. I help banks move from manual compliance to smart ESG automations using SAP and other enterprise tools. So if you're really serious and want to understand the benefits of ESG, leverage it as a profit lever, then contact us. Scan below and let's connect. Let's talk.